Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 8:49 a.m. Eastern Time on Monday, August 9th. Just a real quick look at the week here. Uh, there's not really anything going on today. We got Jolts at 10 o'clock. That's a Blue Star event, which means it's usually not a big deal, but it has the ability to be, market moving. There's really not much else on the news today. There is a speech by Bostic at 10 o'clock also, and there is some audience questions expected at the end of the speech. But, that's due to inclusivity on the economy, so I don't know if it'll be that big of a deal, to be honest with you. Looking ahead in the week, the biggest things for the week are going to be on Wednesday and Thursday. Wednesday we have at 8:30 in the morning we have CPI. Thursday we have PPI, and then Wednesday at 1 we have the 10-year bond auction, and Thursday at 1 we have a 30-year bond auction. Those will be the bigger movers for the week. So the title of my video is Fat Finger and Gold and GC Fat Finger and BTC back over 42,100. I could have also mentioned, crudes yo-yoing, but I guess what I'm trying to get to is it's quite possible that gold, Bitcoin, and crude have sucked the oxygen out of the room, and there's not going to be too much left for equities today. So let's start off with Bitcoin. What I've been watching since it broke under 42,100 was that's really the line in the sand that's going to get the FOMO traders back involved. There's a lot of stuff going on between 28,000 and 42,100 actually. But to be honest with you, a break back over this area of the chart, 39,000 should be what you're trading against now. And Bitcoin has no business getting back under 39,000 and just should be on its way up to another all-time high in the near future. Looking at different points that it needs to break on the chart. Maybe I'll add and update this later, but basically right around 46,000 you can see where this fall was, and we'll just take the top of this and back over 51,000, right? So it's got a little bit of a work to do to get up there. It's right now on the futures market anyways, right around 45,760. So really, this is the area of support you're looking at: 39,000, 41,200, and 42,100. This is really the major support lines that should be holding now for it. Looking at gold last night, and this is just my opinion. I have no confirmation, but I've seen this many times over my trading career, and it always is a fat finger. Someone fat fingered selling 24,000 contracts of gold last night in a thinly traded market and pushed gold down 100 points. I don't know who the dumbass is that did it, but if you've been trading long enough, you've hit the wrong button. You've either bought when you wanted to sell, or sell when you wanted to buy, or you've been on the wrong quantity and clicked and you had an oh shit moment. Well, this traders with bigger accounts can just have bigger oh shit moments than you can, and I guarantee you that whoever executed that trade did not do so intentionally. I will bet my house on that one. And what you have right now is, now that it has happened, what we can watch is basically 1755 would be the area that you would want to watch to the upside, and then 1780 basically. Those are the real things. So we'll see now. If you look back at this chart, basically we've retested these lows in gold from March 8th, March 31st, right? That's where the bid came in, and you can definitely see we have some overhead supply right there at 1764. So for gold, it'll be interesting to see how the rest of the day progresses, but to be honest with you, it could not have much trading life left over for it either, right? It could just sit here and consolidate basically back in this range of the chart, which will be around 17. Let's just call it 1715 for the sake of argument, to the downside now, and then a breach back over the 1755 to 1765 level, and then 1780, right? Those are the stair steps up. And the major line that it really needs to get back above for the bulls will be 1794. So looking back at the equities, uh, another all-time high on Friday. If you look at it, that was at 33 quarter. Right now the futures are trading at 24 quarter, so obviously 9 points down from there. No big deal, and we're holding that consolidation. We could just end up going back up to trend. I'll throw the trend back on here real quick, and we'll look at that. So basically, if we look at the trend, and I'm going to zoom in here a little bit, getting back to trend this week or today would really be basically 44.50 would be back to trend. That's definitely on the table. That's 25 points higher than we are. And then if the market really wants to move, which we'll see if it does. It hasn't tested the upper limits of these lately, but there is definitely room all the way up to 45.25 to 45.50 in the near future. That's where it would be to the upside on the extreme right. I'm not expecting anything this week, just to stay with trend, which would end the week, right around 44.75 is what I'm looking at. And if you go back down, right, for whatever reason, if we get some major retracements, the absolute floor on the market for this week, unless we break the trend that's been intact basically since the pandemic low, the low would be around 42.50, 42.40, right in that area. I'm not looking for that to trade either. And more logical places, if we did get any type of retracement, would be right around 43.30 to 43.20 is what I'd like to see. Looking at the overnight action, 17.25 points, you can see basically we're just sitting here strumming along. We had this tight consolidation for 10, 11 days, sitting back up above this, right? And then if you look, Friday's action was very muted. We'll zoom in and look at all that with the other actors here in a minute. Looking at the midterm time frames in the overnight session, the Russell basically come down and held 22.29. Upside, you can still see that there's a node developing here, a high volume node, right around 22.46, 22.45, and you can see, it's got up to that area, and that's been a little bit of contention lately. And then we've got 1, 2, 3, 4 tops right around this 22.51.52, and it did spike all the way up to 63 on Friday, right? And it's just come back down, check the support. I think it's pretty bullish, to be honest with you, for the Russell, that it's holding 29, which is a known just basic support and resistance line, right? After hitting this retracing, if it was going to fall apart, it would not have held 29 in my opinion. It would have broke 22.15. So I think this is very bullish, and I'll be looking for any technical analysis that leads to higher time frame targets on this. Above the 22.51.52 area is 22.83, which will be the next major spot above, and you can see that high volume node jumps out right around 22.67.68, right in that area. Moving on to the ES, we beat that up a little bit. We'll beat it up some more, so we'll come back to that. Looking at the NASDAQ, it's really holding this 15,057 to 15,107 zone. You can see it got the bid off of that on Friday, come back up in the overnight session. It did trickle down, but right as real traders come in with the European open market, they pushed it back up in through that zone, and now holding above that 107 modestly. We're at 108 now, so we'll see if it flounders around there or not. But basically, you can see if you use Jack's trade room indicators, you got leg starts down right around 15,150, 145, right in that area of the chart. And, getting above there just leads to another all-time high. That might not happen today, and I would be watching that split right around 136 on a very minute time frame, you had basically a small triple top around that area of the chart as well that were weekly holding, right? And then you fell back below. Getting back above there is going to be pretty bullish for the NASDAQ. Looking at the Dow is the weaker market in the overnight session, right? And you can see basically all these midpoint, all these highs, all these leg starts down have really been in this area that we're finding support in the overnight session, right around basically 34,950, a little bit higher. And you can see I wouldn't expect it to go under 34,940. Getting underneath that level, it's going to be a little bit more bearish, right? You've got tried to hold it, tried to hold it, tried to hold it, and keep falling back down. And now that we're above it, it should be the opposite. Bouncing from that level, going back under that is going to be problematic. And the first level I would look for any support under that would be around 34,877. So looking at all the indexes for the Russell, let's look at the major support resistance and major for day traders, right? So above you got 73.20 to 73.90, and below you're still trading against 23 to 24 half. And again, under that you still have quite a bit of support down to basically from 18 to 22 half. There's no other support or resistance that are from single prints anywhere near the area of the charts. You can see just looking at the Russell in value, the NASDAQ in value, the ES trying to get in value, and the Dow not only below value area low, but below Friday's low. And then if you look at where these overnight highs are, right around value area high for the Dow, and then as we come back in, right around value area high for the ES, a little bit over value area high for the NASDAQ, and then at the settlement basically for the Russell. So to me, what I'm going to be watching for is, can the NASDAQ, get over that contention spot, right? And can the Dow find some footing and stay within Friday's range? That'll be the first two reads that I'm looking at other than the overnight value. I hope this helps. You guys have a great day, and I will talk to you tomorrow.